Okay, everybody, I thought today was wild enough that it merited a video, so let's jump in. Here's the ES on a 4-hour bar basis for the entirety of this year. And let's just kind of recap what the year's been like. It was basically solidly bullish day after day after day after day up until the end of March. So Q1 of this year was just like all for the bulls. There was a brief tease for April, which terminated on the 18th. So we had this nice fall. So basically got up to this Fibonacci level here and fell down to this one here. And let's back up a sec. These Fibonacci's are anchored to the low of Halloween, approximately. It's a little before Halloween. So what I call the Halloween bottom up to the lifetime high, which took place just a couple months ago. So that's the fibs. And so, as you can see here, the fib has been very, very helpful. Went blasting higher for the first quarter and got up to the 78.6 level, fell hard to the 50%. Okay, so that's kind of just to literally and figuratively re-anchor you there. And so after that bottom, it was bull time again. And it was pretty relentless rise up until the tippity top up here. Now, following the mid-July peak, we had a fall, partial retrace, fall, partial retrace, and then the big fall, which was just a blast, of course. That was like in late July, very, very early August. And we hit the fib and actually got a little below it. And that happens sometimes when there's a lot of power behind the move. But this fib is what really mattered. I mean, you can see here how important that was. It nailed it pretty much to the penny there. But an hour here and an hour there under it doesn't really matter. So we plunged, found support here, and then we're blasting higher. Didn't even bother pausing there. And this was probably one of the biggest disappointments of the year. It seemed sensible in mid-August that it would stop there and reverse. It didn't do it. It just rolled its eyes and cut right through. And then we began what seems to be a little bit of a shift here, because we did not even match the prior high. And we formed this top here. It took weeks, but we formed this top. Fell, pushed back to resistance, fell, pushed back to resistance, then fell hard. Here's our Fibonacci friend again, right like so. And this is, and we can zoom in tighter and tighter. Now we're down to the 15-minute bar level. This just only goes back a few days. So last Friday, the Fibonacci was major support. And in fact, I did a post early in the day. It was actually just, looks like it was just a little bitty bit into the day here, where I kind of recapped what today was like and mentioned the importance of the Fibonacci. So here, and I'm just kind of recapping this post here. At this point, we're precisely at the Fibonacci level, which represents meaningful support. Now, mind you, I wrote the post when the market was here, which was pretty much the millisecond. So yay me, or yay Fibonacci at least. And I said, break this, we get a whole new bearish chapter. We really didn't. We didn't break it. That was firm support. In fact, I updated the post minutes later because it went chapoing like that, and it was just starting its climb, as we know now. So enough of the victory lap. Let's get back to the chart. So we did bang down there, and got a little below it. Who cares? We did the same thing here, and then it was just bonkers. It was just straight up. It's absolutely absurd. We climbed. My God, I mean, what was it like? 130 points, something like that, 140, something absurd, just like blasting higher the whole damn time. So that sucks. Although, at least I had the good sense to trim my holdings down here because I figured this was pretty important support. All right, so that's the ES. Very, very cool. And yeah, that's fine. Thanks for the history lesson. But where does that leave things? I think it leaves things at resistance now. This move here unwound days of selling, and we're basically back to where we started a couple of Tuesdays ago. We're back to this massive overhead supply. Now, if it just keeps going, well, that would really suck. The higher it goes, the more it's going to fight this. This is the easy part. This was very quick and volatile. This fell very quickly. It recovered very quickly. This is tougher. This is a lot of overhead supply. And mercifully, we're past the CPI, so we don't have to wring our hands. I don't think anybody cares about the PPI. We'll see. But this, I do think we're at a very interesting level of resistance here. As far as the NQ, kind of the same story. The pattern isn't quite as clean. It's a little tougher to anchor exactly where this goes. And plus, they may exist, but I haven't teased out the appropriate Fibonacci's on this one. But this also was just an insane move. It went up hundreds and hundreds and hundreds of points in the span of just a few hours. But my perception here is that we're obviously below this huge top here, and we're further below this smaller, lower top here. And as I say, I'm having trouble pinpointing just exactly where to put that. This is just kind of a dumb guess, but it's approximately this zone, like so. And the weakest today was the small caps. This was they were up only 0.29% versus the NQ, which was up like 9 times that much percentage-wise. The small caps have their own fibs, which actually are anchored on a weekly basis. In this instance, and here I'm going to pause for a sec. Okay, what I did, I sneaked behind your back and I got rid of the weekly fib and changed it to a daily. Meh, it's not very helpful. It's just kind of random. I don't even know if I should keep it, so we'll just leave it there for the moment. But yeah, not very helpful. The CPI seems to have really wound up as irrelevant because the belle of the ball today was Nvidia, which the CEO, who, let's face it, has a little bit of a vested interest in the stock doing well, announced at a Goldman Sachs conference that the demand for their chips is very strong. Okay, great. Based on that alone, literally trillions of dollars of equity value were added back to worldwide markets based on this one utterance. It had been recovering since Friday, got down to around 100, and just to do another victory, I did a premium post today in the morning, which pointed out Nvidia was the driving force behind today's rally, and I set up a specific target of 117.22, which was well above where we were at the time, as you can see. But, and I haven't checked, let's find out where we wound up. All right, there's Nvidia, today's peak, 117.2. Not bad if it holds. I mean, I'm not going to shoot my mouth off and have this thing gap up tomorrow and look like an idiot, but looking like an idiot is kind of what you do if you're in the prediction business. But in any case, I predicted 117.22, 2 pennies shy of that. So yeah, if that turns out to be the high, okay, great. Here are plans for a statue of me, but otherwise we'll see, because maybe it's just dumb luck and it'll just keep going. But joking aside, that was the target. The target was achieved, and we'll see if that's all she wrote, because the CEO is not going to make another announcement tomorrow at the same conference. I mean that's that. So that it's incredible to me that one announcement has so much power, but that was the power behind that NQ explosion today, which again was over 2%. So anywho, I'll wrap it up there. I think that's enough. That's kind of where things stand as far as my own portfolio goes. I had raised cash already in anticipation of the rally, and today was the first losing day I've had since a couple of weeks ago, which is no fun, but it could have been a lot worse if I'd been fully invested. So I remain relatively light, about 30 to 35% cash, depending on the account, and just holding tight on these other long-term put positions. And one last thing, I've done something very uncharacteristic. Near the end of today's crazy ascent, I did buy short-dated spider puts. That is to say, next Friday, the 20th, I bought puts with a strike of, I think, 550, just because I think / hope that this rally's bonkers. So we'll see how that goes. All right, thanks. Bye.